the story of Bitcoin from shadows to spotlight. In the wake of the 2008 global financial crisis, trust in banks and governments was at an all-time low. People were angry, confused, and desperate for change. Amid this chaos, a mysterious figure named Satoshi Nakamoto appeared on a cryptography forum and shared a white paper titled Bitcoin, a peer-to-peer electronic cash system. No one knew who Satoshi was, man, woman, or group. But the idea was clear. Create a digital currency that needed no middlemen, no banks, no governments, just people trading directly using code and cryptography. On January 3rd, 2009, Bitcoin was born. Satoshi mined the first block of its blockchain, embedding a message from a British newspaper, the chancellor on brink of second bailout for banks. It was more than a timestamp, it was a protest. At first, Bitcoin was an experiment, known only to a handful of tech enthusiasts. It had no real-world value. But in 2010, a programmer named Laszlo Hanyecz bought the pizzas for 10,000 BTC, the first real transaction. That day became legendary in Bitcoin history. Over time, more people joined. Developers improved the code. Miners secured the network. Traders bought and sold Bitcoin on new exchanges. It was still volatile and misunderstood, but it was growing. Challenges came quickly. Bitcoin was linked to illegal activities on dark web markets like Silk Road. Governments cracked down. Critics called it a scam, and major price crash scared away many. Yet Bitcoin survived. In 2017, Bitcoin reached nearly $20,000. The world took notice. Then came the crash, prices plummeted, and skeptics said it was over. But Bitcoin didn't disappear. It evolved. The 2020 pandemic reignited interest. As central banks printed trillions, investors looked for alternatives. Bitcoin, with its fixed supply, emerged as digital gold. Companies like Tesla and MicroStrategy bought in. Even banks started to offer crypto services. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender. The experiment had reached national scale. Today, in 2025, Bitcoin is no longer a fringe idea. It's a global symbol of financial independence. Its price still fluctuates, but its message remains. Money can be free, borderless, and owned by no one. And Satoshi? Still missing, still silent. But his creation lives on, changing how we think about money one block at a time. As Bitcoin gained attention, it forced the world's most powerful financial institutions to take notice. What began as a quiet rebellion in code had now reached the doorsteps of global banks. In the early years, most banks dismissed Bitcoin as a fad. Some called it a scam. Others warned customers to stay away. It was a threat to their control of currency without a central issuer, immune to inflation and untraceable by traditional standards. But as the years passed and Bitcoin refused to die, attitudes began to shift. Central banks saw it as both a challenge and a warning. It exposed the weaknesses of fiat currencies, how easily they could be printed, manipulated, or devalued. Private banks, especially investment giants, realized they could no longer ignore Bitcoin. First came research papers, then cautious exposure. Some hedge funds added Bitcoin to their portfolios as a hedge against inflation. Slowly, the lines between traditional finance and crypto began to blur. Meanwhile, Bitcoin offered something banks couldn't: transparency without trust. Every transaction was recorded publicly on the blockchain. There were no hidden fees, no gatekeepers, no delays across borders. For millions of people without access to traditional banks, Bitcoin became a lifeline. But tension remained. Regulators, pressured by central banks and governments, tried to rein Bitcoin in. Laws were drafted, tax rules tightened, and exchanges scrutinized. Banks feared losing control over money flows. For them, Bitcoin wasn't just a currency. It was a revolution threatening centuries of financial dominance. Still, progress continued. By 2025, some banks had gone full circle. A few launched their own custodial services for Bitcoin. Others began offering loans backed by it. Some even experimented with blockchain for internal settlements. Ironically, they began adopting the very technology they once feared. Yet Bitcoin remained unchanged at its core. No central bank could control it. No institution could pause or reverse its transactions. It lived outside the system, but influenced it deeply. The story of Bitcoin and banks is not one of friendship or war. It's a story of uneasy coexistence. One side represents the old world of centralized power, the other a new world of decentralized freedom. And somewhere between them, a new kind of financial future is being written.